That's what it is. But if I want to just speak about mutual funds in particular, there's one category, arbitrage funds, which basically sort of depends on a lot of transactions being conducted so that they can gain from the differentials. How do you see this impact funds like these? Do you see the expenses going up? And do you see it going up to such a manner that, the potential gains from arbitrage funds could be impacted?
Uh, yes, so I do definitely see the cost going up. And what's happened is that the cost will go for the investor because SEBI recently changed the regulation where they brought, earlier there was a TER concept. Now they have brought it as a base expense ratio, and all taxes and expenses are passed on to the investor over and above the base expense ratio. So this taxation cost will directly go to the investor and impact his returns. But I had a study and a look at a few AMC's arbitrage funds and had a discussion, and I find that it's about 10 basis points on an average that the return will get affected. Now, you look at the history of arbitrage, they have varied between flat to 1% to something 7 and 8, depending on the volatility in the market. So in the times when volatility is very high, I think the returns are easy enough to absorb it. But in a time when the market is very flat and not going anywhere, then arbitrage can be very, very marginal. And there at 10 basis points might make a difference because the primary investors in arbitrage funds, because they carry an equity taxation benefit, are institutions and HNI individuals who are using this an alternative to savings bank or liquid funds because there's a better tax arbitrage here. So I think, yes, so it depends on the time frame. Highly volatile markets, these returns, though they won't make much difference, but in a flat market, there could be a significant difference to the investor.